What's up, my friendly neighborhood home buyers? Today we're going to look at a program that has gotten a lot of interest in recent months called the 2-1 Buydown program. Now, if you are watching this video, you probably have seen it in other places, other YouTube channels, as well as from other lenders. Today we're going to look at some of the benefits to the home buyer as well as the agent. That's right, this is not just something that is beneficial for the home buyer. So you probably have noticed, and really it's not a secret, that the housing market is in a really weird spot right now. We're moving from a seller's market to a buyer's market. Houses are starting to sit on the market for a little bit longer, and has a lot of people concerned. You've got rates all over the place going up and down and who knows where, and inflation breathing down the necks of most Americans. And it's really preventing people and having a lot of people concerned as to whether or not now is a good time to buy. Now, if you've watched my other video on reasons why to become a homeowner, then you know that this can still be a good time to buy. Now, if you haven't watched that video, you can follow the link in the description, or you can click in the upper right-hand corner and you can go check out that video. It's got some really good information as to why you should enter into the housing market and not be afraid of these high interest rates and home prices. So with that, we've talked about how that if rates go down, you can just go and refinance your property. And if we see inflation cooling off, we see it go down, we are likely to see interest rates also follow that inflation line. So as inflation goes down, we'll likely see rates go down. But what about right now? Right now, homes are kind of expensive and you have rates really expensive. But what if you want to take advantage of a lower rate now? Traditionally, you would put some money up front and pay an interest forward, or pay interest at the beginning to buy down your rate. Well, we have something available now called the 2-1 Buydown program, which is essentially, and this is something that can be kind of complicated, but essentially is a seller paid subsidy paying for part of your interest payment every month for 2 years. In the first month, or in the first year rather, you're going to be paying 2% less in interest. So let's say the interest rate is 7 1/8, 7.125. You would be paying an interest rate that is equal to 5.125 in the first year. In the second year, you would be paying 6.125. And those funds are getting paid for by the seller. This is a really cool program, and before we kind of talk about the benefits, let's look at some examples of what that payment would look like. So in our example here, we're going to be using a $350,000 purchase price and 5% down. Now note that this is only going to be one possible scenario. Rates will be different depending on when you are going to be talking to a lender, and we're going to be different based on your situation. So this is not necessarily what your rate will be. This is just an example. And then the monthly payments that we're going to be using is just principal and interest. No taxes and insurance and HOA fees are not going to be included. So it's just principal and interest. So on a 30-year mortgage, fixed rate with a 7.125 interest rate, you're going to be paying about $2,240 a month in just principal and interest. So if you were to use a 2-1 Buydown, your rate for the first year would be like you are paying for 2% less, so 5.125. That would make your principal and interest payment be $1,810. For the second year, your rate would increase essentially to 6.125, and your payment would now be $2,020. By the end of year 3, or by year 3, your mortgage payment is going to be back to that 7.125 amount of $2,240. So for this example, the total cost for a buy down would be approximately $7,794 from the seller. So if you're looking at year 1 to year 2 savings, in year 1, you're going to be saving about $430. And then in year 2, you're going to be saving $220. Now that is a huge amount of savings, and you'll be able to pay down your credit cards. Maybe you can put that in the savings account, or maybe even invest those funds to help kind of create a financial cushion. Now, something to note as the buyer, your lender is going to qualify you using that final note rate, the 7.125. So assuming you can qualify for that, you will be all set to take advantage of this program. Now, what if let's compare this to asking the seller to lower the purchase price, which is pretty common when you're negotiating, is saying, hey, let's bring down that purchase price a little bit and then you lower your payment. Let's say maybe you reduce the payment by $10,000. So now you have a $340,000 home. Your rate would not change. It'd still be 7.125. The loan amount has gone down because the purchase price has gone down, and your principal and interest payment is going to be $2,167. So that equals out to a $64 of savings versus our numbers at the beginning. Plus that costs the seller $10,000 to lower that price. So the benefit to the buyer here is pretty obvious. In the first 2 years, you're going to be saving hundreds of dollars every month and thousands of dollars over the course of those 2 years, which is great. You can use that to pay down other debt like we just said, or maybe invest it or save it. That choice is up to you. But what about for the seller? Now, for the seller, that means a couple of things. One, you don't have to lower that purchase price, which means you're going to make more money at the end of this sale than you would have if you had to lower that purchase price. Look, Mr. and Mrs. Seller, this is a hard reality to face, but the days of selling your house for highest and best and selling within a matter of hours with tons of offers is done with. Houses are sitting on the market for longer, so we need to be able to find a way for you to be able to maximize the amount of money that you're going to make on selling your house. So if you're willing to sacrifice just less than 5% of the funds that you would make instead of lowering that purchase price, you'd be able to help yourself out and help out that buyer. So as an agent, both on the buying side and on the listing side, this is a big benefit for you as well. On the buying side, the 2-1 Buydown is a great negotiating tool. Instead of asking to bring down the purchase price, you can ask the seller to bring up some of that money as that subsidy and help bring some more interest and help your offer be a little bit stronger. And as a listing agent, if you're struggling to get some traction and getting people into that house on open houses or just to have regular showings, then this can be something to incentivize people to come in, saying that the seller is willing to offer up a subsidy to help for those payments. These are both ways that can help you and without having to lower that purchase price, which just makes everybody happy, especially those who are making commission on the sale. Bottom line, the 2-1 Buydown is a win-win situation in a lot of cases. And it may not be best for your specific situation, so you need to talk to your lender and to your real estate agent before really getting into that, but it can be a huge benefit to all people around. But what happens if the rate goes down in those 2 years? Experts are saying as inflation cools off, then rates will continue to go down. Now we may not see them in the 2s ever again, but we might see them in the low 4s, maybe even in the 3s again. This is something that you can still take advantage of in these 2 years. If those rates go down, you can refinance. Any of those funds in that time, if you decide to refinance that weren't used, that subsidy that wasn't used, can go towards your principal balance and paying that down, which is, again, just another benefit for the buyer. So while people are freaking out and holding off from being in the housing market, you can go with confidence as the competition has decreased that your offers, your negotiation is going to have more results. And this is going to be huge for you. And as we see prices maybe not dropping as much because we have more people entering into the housing market every single day, and as we get later into the springtime of 2023, the spring buying season will still be up. Demand being high means prices are going to be high. So we may not, depending on your area, see prices in houses drop. So take advantage of that less competition now and do the 2-1 Buydown and get yourself into a home. Start paying yourself with your mortgage and start building wealth today as a homeowner. Hey, thanks for watching this video. If you enjoyed the content or found value in it, please hit the like button. And if you want to get notified on when new videos come out, hit that subscribe button and the little bell notification and you'll never miss another video. If you are looking to buy a house or you have any questions, feel free to drop a comment down below or reach out via my contact information in the description. Thanks, have a great day.